Our first speaker this morning is Troy Applehans. Troy is with CattleFax, based out of Denver, and if you all are not members of CattleFax, we at Santa Rosa Ranch have been for several years, been members of CattleFax, and they provide some of the most critical economic data for us to make when with our different production decisions. What Troy is going to discuss this morning is what do the numbers indicate about the future beef cattle markets based on supply and demand. And it's so critical for us to understand, like Dr. Rawson said, ultimately at the end of the day, we're producing food. So we need to understand what the demand for our product is and what opportunities there are, not only in the United States, but outside of our borders, which are so incredibly critical. But Troy is a graduate of Oklahoma State University, and he is the CattleFax cow-calf and stocker market analyst specialist, focusing primarily on the Southern Plains region. So without further ado, I would like to introduce Troy Applehans.
Thanks for having me. Good morning, everybody. It's great for me to be back here once again with you all, and what a turnout we've got. Andy continues to elevate the level of this every year, and it is a tremendous opportunity. So on behalf of CattleFax and myself, consider it an honor to be with you all today. I truly do. Especially want to say thank you to the sponsors as well. I know we're not cheap to get here, Andy. I don't know if I'm worth it, but we do cost you a lot of money. We do send you the bill. That's right. I've been here for a long time, and I appreciate the opportunity to be back here. So what has changed in the market over the last year? I think all of you that were here last year remember me talking about the leverage situation that we continue to battle, the different segments of the business that, you know, every animal only has so much margin per head, right, to go around to all of these various segments. And we can divide it into the cow-calf, the stocker, the feed yard, the packer, the consumer, all that, those types of things. And this leverage situation has continued to be a burden on you all as a cow-calf or stocker operator, or even as a cattle feeder, because we simply have more cattle today to process than we have the ability to process. And so that is one of the things that we continue to battle. Obviously, the market has not changed significantly over the past 2 years, price-wise. I think overall there's enough money in the system for every segment to get some margin. It doesn't mean that everybody has been profitable or as profitable as they'd like to be, but there is enough money in the system, and that is one of the good things that we have. If there's not enough money in the system, that's a challenge. But currently we do have that. Obviously, we're still working on trade deals, bilateral trade deals with Japan, which is a huge one for us. Obviously, a lot of you have heard about the China deal. Supposedly, an agreement is going to be made at some point during the second quarter here. That's going to be beneficial for us. But there are other things. We can still continually have to market cattle aggressively. We like to use the phrase be a market maker versus a market taker. That's what we encourage the people that are members of CattleFax to do. And we do encourage all of you to become a member of CattleFax. That's one of the things that I think a lot of people kind of get lulled to sleep at sometimes. They say, well, I heard a CattleFax speaker and I kind of know what CattleFax thinks for the year, and things change so quickly in this industry, as we know. We would invite you to all to become a CattleFax member with us. I think if we just look at the total U.S. cattle inventory, the numbers have rebounded obviously due to profitability. The past several years, we remember the utopia profitability that we had in 2014 and to a large degree in 2015, but 6.5 million more since 2014, including 3 million more beef cows. Weather has been conducive to expand our herds at one of the most rapid expansion rates in the history of this business on a percentage basis. Okay? We all know that when profits are good, everybody wants a little bigger piece of the pie. That's how these cycles typically work. Profitability is there, all of a sudden you get too many and we force prices down. Again, I wanted to mention that it certainly appears as though there's enough money in the system. If we look particularly since the new millennium, if you will. If this chart went back to 1980, for instance, it would show you that it was a break-even business for a period of about 20 years. by segment, okay? And this is looking at it specifically by segment. You can see the green. If you're in the cow-calf business, your profit has been pretty good, right, on average. I think we just look at the trend. It doesn't mean you specifically because obviously there's variances across the country. But from 1980 to basically 2000, this industry was trying to split up $50 to $75 per head for all of those segments. That wasn't sustainable. Something had to change, right? I think when we got to the new millennium, in particular, that's when the industry really started going global on the protein side. Not just cattle, but also pork and poultry in addition to that. So, since then, we've seen much more sustained profitability by segment. But the good weather conditions have also kept feed prices in check for us, right? We look back and it's been in a $3 to $4 range over the past 4 years, and it's expected to continue again in this year. Slightly higher corn prices, and corn prices are highly correlated with other feed costs, whether it be hay, whether it be cubes, whatever it may be. Corn prices are highly correlated to that. So when we look at this drought monitor, and this is one of the biggest benefits that we've seen over the past year in particular, folks, it doesn't get much better than this. I've looked at these back historically for 20, 30 years, and I've never seen one this good. We've got really, really tremendous conditions out there that can sustain cattle business going forward. Just to give an update here on our forecast from Dr. Art Douglas, who works with us. Obviously, most of April is about over right now, but when we look into May, particularly for this region in particular, it looks like the temperature is slightly cooler than normal. It looks like moisture conditions are pretty normal to slightly above. We get a little longer range outlook here for the months of the summer. June, going to be very hot, is what it looks like. And that is probably the toughest month that we see on this map in terms of temperature and precipitation. The rest of the months, July and August, look very favorable, normal to slightly above in terms of moisture conditions. So it is expected to continue. This El Nino event that we've seen over the past year is expected to continue at least into the fall is the prediction. We do still feel like that we're in a cattle price cycle, although I think this one's somewhat different. We can look back historically and see where every 10 to 12 years there was a high to a high or a low to a low, if you will. You can see the trend, the overall trend of the prices has gone up. And so where your former high was on these cycles then kind of becomes your support level, if you will. Inflation, prices have gone up, everything kind of goes up. But we still feel like that we're in a cycle. Bottom line is that this cycle could be different in terms of the way we look at it because it's largely a restocking cycle, if you will. If we look in 2009, 2010 time frame, and we went up to 11, 12, 13, everybody remember what was going on during that time frame where the market kind of gave us, or at least the cycle kind of gave us a head fake? Those were the drought years, weren't they? Largely since that time frame, we've just kind of restocked the herd. And I think if we take a look at this by region, it's kind of showing and evident that, at least in the Southern Plains since 2006, what was kind of the peak of a last mini cycle that we had, we still haven't really restocked the whole Southern Plains quite yet. There is room to expand. There is still room, and weather conditions are certainly conducive to doing that. What changes expansion or contraction? Price and drought, right? We get into a drought, we'll reduce cow numbers significantly. But we haven't had long sustained droughts in the major cow-calf states, which are in the center part of the country, for a number of years. We've had some spotty droughts in other areas. I know in this part of the world a year ago this time frame wasn't too good, was it? But we haven't had a sustained drought to reduce herd numbers, and we haven't had prices that people have simply lost enough money to get out of the business, right? We're having a problem changing the slide. Yeah, it's not going. Yikes. 1 second, folks. Okay. we're back going. Some technical difficulties. Beef cow numbers have gone up. If we look back over the cycles, obviously, what the inventory report that came out for the January 2019 said was what we thought, how many beef cows we thought we had last year. Well, they revised that down 300,000. So how many beef cows we thought we had last year, now we have this year, which is 31.8 million. And so they kind of revised that, but we feel like that we're kind of in an area right in here where the market's comfortable enough with that many cows. We could expand slightly going forward here, but we probably don't expect to expand tremendous amount from where we've been over the next few years. With that, we're going to have an increased calf crop, right? So the point here is that when we continue to increase protein of all proteins, pork, beef, and poultry, you got to find a way to get rid of it. And so what is demand doing, right? And so we look at this and we see, well, the prices on average for 550-pound steers hasn't changed significantly over the past 2 years. We feel like we've got really, really good support at this level at the 140 level. I don't know if those of you that were selling calves in the fall of 2016 remember that market wasn't too good during that time frame. 550-pound steers averaged 127 during the month of October in 2016. That's not conducive to profitability. Is that the low of the calf prices during this cycle? In my mind, it probably is. We feel like that we've got really, really good support in the 140 level and pretty decent resistance at the 180 level as well. Those of you that can remember, the calf prices never really broke the past 2 years. We look at this in terms of the typical seasonality, which would be the red line on here. You can see that the seasonality of calf values, how they go up into the spring when we have tremendous grass demand for calves during this time frame, and then calves kind of drift off typically. And this is a 20-year index, and this is the area that we try to stay out of in terms of marketing, because that's when most calves are marketed, right? We have about 75% of cattle producers in this country that are spring calvers and wean in the fall. There's an abundance of calves available, which is why we see the lowest prices during that time frame. But as we can see in 2017 and 18, those prices never really had that big seasonal lull to them that we typically see. We are expecting 2019 prices to continue to stay fairly high a little bit longer into the spring. We know we've had a long winter, particularly in the north. It was as bad as advertised. Lost a tremendous amount of cattle up there. I don't think it's as bad as their governor was trying to say. He's supposed to say that they had lost 1 million head. He's looking for federal funds. Those are the types of things that he's supposed to do. I think that is probably overestimated, at least from us. But there's a lot of northern producers that are still looking to accumulate calves, and those prices are typically higher than the south. And so this calf prices should stay fairly elevated a little bit longer into the spring. We do expect a seasonal type market. We do expect the lows to come out there into the fall time frame. Hopefully we don't have to get a whole heck of a lot lower than we did last year, but I think we still need to plan for calf prices to potentially be in the 150s in the fall. Feeder cattle, basically the same thing in here. Very range bound from 140 to 160. Been that way for 2 years. And this is just the spot weekly feeder cattle futures, basically in a $20 per hundredweight range. Not that $20 a hundredweight isn't important, particularly on an 8-weight, but at the same time, it's been very range bound. It hasn't deviated significantly. For those of you that are trying to manage risk on cattle that will be coming off grass later this summer, I think when we get up here to these levels that we've been, which has been assisted by the hog futures, we probably need to do something in terms of risk management. I don't know that, seasonally it's the wrong time of the year to do that. We typically can afford to be less aggressive managing risk on feeder cattle, and I'll show that to you on the next slide. But this is kind of where the support and resistance levels are, is in this 140 to 160 range that they've been in. And these are just quarterly ranges. And they've averaged near 150 for the past 2 years. This is why we can typically afford to be less aggressive managing risk on feeder cattle coming off of grass during the July, August, September time frame, is because that's our typical seasonal highs. That's typically why we can afford to be less aggressive, yet this is why I say this is the wrong time of year to be protecting or managing risk or hedging feeder cattle. Seasonally it is. Yet at the same time, I think when we look at this and say, well, it looks high, you know, we're up there towards the upper end of the range, it's certainly probably imperative to do it on a portion of your cattle to manage risk that way. This is just looking at the August feeder cattle basis. Basis is simply cash minus futures price. And this data goes back to 1984. And this is the range. This is a 3 standard deviation move that occurred on March 14th. We've had the weakest basis in August feeder cattle. And the August feeder cattle contract is one that typically a lot of feeder cattle, particularly out of this part of the world, are marketed against, right? This is telling us that you probably need to hedge something. That's what the market would tell us. We look at these trend lines and we violated the basis trend line. This is really, really important to those of you that are running stocker cattle and grass cattle this summer. I probably would lean more towards the options market and buy puts, because I think most of these cattle have some profitability in them. I know puts are expensive. It's simply buying insurance if the market goes down, yet leaving the top side of the market open in order to capture some premium. We know how big cattle on feed numbers, right? It's the least held secret in the world is that we have a lot of cattle on feed. The April cattle on feed numbers that just came out are the biggest in history. And so we know we have a lot to get through, and we know that we have significant amounts more cattle to process. And we know we have a lack of leverage and a lack of packing capacity. Okay, so who does that give the leverage to? Obviously the packer is going to continue to make their $200+ per head. And that's something we have to continue to fight. But beef production goes up as well. And when we look at this, obviously, we know that the cow numbers are as low as they've been since the 70s, but we're outproducing it. We're doing more with less. And the quality of the product is so much significantly better than it has been ever historically. We've got all the cattle grading 80% choice or better now. So it comes down to exports, and this is something that's concerning to us. Year to date, these exports are down about 4.1%. Why is this? This is a question that we're asking ourselves. Is this due to global currencies? Is it due to a global economic slowdown? Because we certainly don't want that. We know we're a much more global protein environment than we've ever been in history. That's some of the things that are very concerning to us. We had originally projected beef exports to be up 6% in 2019, which I think if we look back, the past 3 years have had double-digit percentage increases in beef exports. So the rate of increase is slowing. With this data that we've gotten, and we've had the government shut down obviously for 5 weeks, and so we only have this data through February at this point, but it is very, very concerning to us that it's down as much as it is when we were projecting it to be up. The other thing that we always have to look at is how competitive are we with the other proteins? What is the risk going forward of beef being too high priced compared to our competition? We look back to 2000, beef was priced 7% greater than pork, and in 2018 it was 52% above. In 2000, 78% greater than chicken. In 2018, 204%. We see how this price spread is. We see that consumers in a good economy like we have, record low unemployment, raising wages, the preference is for consumers to eat beef. But we always have the risk of a recession, don't we? Historically, we're overdue for one. Every 8 to 10 years is when we typically see one. This is another concern of ours going forward, is that within the next 2 years, which a lot of analysts are projecting, that we could see another recession. I think most analysts would tell you that one's not going to occur before the next election. And they also feel like that if the Republicans remain in power, that the risk of a recession is reduced. I don't know whether that's true or not. That's what they're saying, and I think there is some validity to it when we look back historically at that. But the risk of a recession and being competitively priced with our competition is a risk going forward. This is important to us too. because what this is telling us is the export value per head is $350. We all know that the types of things that can occur that can send this market into a tailspin for some unknown reason is always real. Terrorist attacks, BSE. Remember those types of things that sent this market into a free fall at times. They're out of our control. We call those black swan type events. But if we lose our export market due to some unforeseen circumstance, that's $350 a head right off the top. That's going to impact you as a cattle producer no matter what segment you're in, significantly. So when we look at imports, exports, all these types of things in production, we look at per capita consumption, these are going to change a little bit, obviously, and we'll get into some of that. But 57 pounds per person, you know, that's how much beef is here for every man, woman, and child to consume. And when we look at pork production, it's increasing as well. Per capita consumption of pork is somewhere in the mid-50s as well. Poultry production increasing. Poultry consumption's in the 90 pound per person overall. But the bottom line is we're producing a lot of protein, a tremendous amount. We've got to find outlets. We need to open our trade up to other people, to other countries that want our product. We need it to be on a more level playing field, which I think is what our current administration is trying to accomplish. Bilateral trade deals with Japan and China, those types of things. So we look at all of beef, pork, and poultry production. The trend is clear, isn't it, going forward? But it's a much more global protein environment than it ever has been before. But overall, 1.6 billion more pounds in 2019 is what we're producing. This is a big one. How many of you in here know anything about this? Show with a raise of hands, please. This is huge to us, folks. I think this is one of the things that I'd like to spend a little more time on than I have in previous years regarding pork in general. But Chinese government has most information regarding this disease on lockdown. This is big, okay? China represents 50% of global pork production, 20% of global pork imports, and 55% of the world's hogs, estimated around 433 million head. Sow liquidation has been estimated at 19 to 20%, 9 million head. That represents an annual market hog reductions of roughly 100 million head. The Chinese eat a lot of pork. Their per capita consumption is in the mid-80s, 80 pounds, 85 pounds per person on over 1 billion people, right? There could be a revolt here if they don't have anything to eat. They are currently, and I'll go into this a little bit more than maybe you want me to, but they are burying hogs. They're burning them. There's villagers. There's a lot of poor people in China, and there's villagers that are literally going out and digging up the carcasses to cook it. It doesn't hurt you. You can eat the carcass. You can eat the meat. It's an extremely hard disease to contain for hogs. And it is by nose-to-nose contact. There's not a vaccine for it or through blood. But even when you bury these carcasses, the virus lives in the bones for up to 2 years. The virus lives in feed. I saw a news story last night where somebody in New Jersey imported about I think it was 1 million pounds of Chinese pork into the U.S. All of that pork probably has this virus. Luckily it was caught. And we're trying to keep this virus out of the United States. But if it hits the United States, and I think it's probably a matter of, when, not if, that it gets to the U.S., this is huge in terms of global protein production for us, okay? When we look at this, Vietnam and just China alone, we could take all of the pork production in. Yes, sir.
Does it only affect pigs and hogs, or can it spread to other
Yeah, right. The question is, does it only affect pork? Yes, species. Hogs, yes, sir. That's correct. But can you imagine if we were to get this virus in East Texas with the wild hog population there, how hard it would be to contain? Tough. Talk about redneck shooting some hogs now. I mean, it would be game on, wouldn't it? Enough bullets. But what I wanted to say here was that all of the pork production in North America, in Canada, United States, and Mexico isn't enough to fill the void that's going on in China right now that they've lost. This is huge potentially. So what does it mean? What does it mean for us, right? Well, it means that there's a global shortage of protein. There's not a shortage, but a reduced level of it. If we put all the protein in the globe into one bucket, and all of a sudden China's reduced it by 20%, that's pretty significant, isn't it? Basically, we got the news that China was going to import U.S. pork on March 14th. And this is what happened to the market. It went from 78 to 103 in 11 days. That propelled cattle futures higher during that time frame. Everybody looked forward to that. It looked good. So what it is that there is an advantage for beef because when we look at the futures implied, and we're just looking at the lean hog index price ratio to cattle futures, you can see how much more competitively priced beef is to pork at this particular time. That helps us. That helps you as cattle producers. But China pork production, as an estimated 20% year-over-year reduction, is 24 billion pounds. The 2019 USD estimate for total global exports is 19.4. They've reduced their production on China alone more than the entire globe exports pork. If that makes sense. That's a tremendous deficit, isn't it? All the pork exported around the globe couldn't fill the gap. So it takes per capita supplies of pork here domestically. We don't really know where it is, but it reduces them. They're going to fill, U.S. producers or consumers are going to fill that void with something. We want it to be beef, right? U.S. exports of beef, pork, and poultry on a per capita basis, this is what we're looking at as 45 pounds basically. 40 to 45 pounds is what we export of protein production here domestically. Again, this is important because if we lose our export market, all of that product comes back here that we have to consume domestically and it drives prices lower. We're looking forward to exporting more pork around the globe. We're looking forward to exporting more beef, not necessarily to China, but to somebody to fill the void. The overall per capita meat consumption could be reduced down in here to the mid-teens, simply due to the African swine fever epidemic that's all over Asia and Russia and all these places. We know that consumers are spending more money on beef. The trend is very clear. Based on steady retail prices in 19 and steady supplies, there's $5 billion more to share across all of the beef segments than we had just 3 short years ago. $5 billion more. So how much of a percentage of that can we get as a producer, as a cow-calf or a stocker operator? That is the dilemma because we are in a battle with the packer. Production has been good. This is one of the reasons why consumers are willing to spend more on beef because the quality and consistency of the product is much higher. We got in terms of just billions of pounds of USDA prime and choice production, that trend is very clear and very, very steep. I mentioned the risk of a recession and what it does. And beef demand and disposable income go hand in hand, right? The past 2 recessions led to incomes falling 4% and 10% in 2007. This was the big one, 2007, 8, and 9. But we can see what happens to disposable income. That's tough on us. That's something that we fear going forward. That certainly can occur within the next couple years. This is a big one too. We look at the threats to our business. We talk about, veggie burgers have been around for a number of years, haven't they? Been able to do that. So this cellular-based protein that we're looking at. And I know a little bit about this because I was on a program with the North American Meat Institute, and I learned a tremendous amount about this. And what this is they can take cells from an animal, from cattle, ante-mortem or post-mortem, and they can replicate this and grow beef in a lab. Now, obviously, it's just hamburger. They can't do whole muscle cuts or those types of things, but they can replicate these cells over and over and over. They might be able to do it for 10 years before they have to go back to an animal and get more cells. This is a challenge to our business. Tyson and Cargill have already invested in this business. So you ask them, why would you invest in this business? And their answer is, we can have beef without having to kill an animal? Doesn't that look good to everybody? The first product that will come out is probably a chicken nugget. They are doing this, though. So in 2013, it cost $325,000 a pound. 2015, less than 12, and in 2020, it's estimated that they can produce lab-grown hamburger for under $3.40 a pound. This is a threat to our business, isn't it? Something we always have to think about. How are they going to do this? And this is what, you have these people out there that are trying to destroy this industry. I'll read this from you because this guy is the future of meat in February of this year. Pat Brown, CEO and founder of Impossible Foods. What could I do that would have the biggest positive impact on the world? And looking at what are the biggest unsolved problems in the world, I came relatively quickly to the conclusion that the use of animals as a food production technology is by far. And I can give you endless reasons why that's true, but it is absolutely true. By far the most environmentally destructive thing that humans do. If I could snap my fingers and make that industry disappear right now, which I would do if I could, and it would be a great thing for the world. Anybody getting mad in here about that? Makes me mad. Right. Yes, sir.
Well, it's a good theory, bad idea.
Good theory, bad idea.
Because, it's not like there's an infinite number of cows, but there can always be calves if we do it right.
Yeah, and I don't know that we want to get into that in this discussion here. I think what I wanted to present was the fact that we have people out here like this, in groups out here like this, that don't want our industry. They don't want it. And this is a battle and a threat for us. These are our cattle prices. This is the cycle highs, obviously, that we saw in 2014. Prices have come down. This isn't necessarily a forecast. This is what the data analytics would say that these cattle should do, that we should bottom out the market in 2020, 21, and that prices should kind of increase going forward. That's based on a lot of things, isn't it? Imports, exports, global production, African swine fever, all those types of things, right? The point being is that prices should bottom out here within the next year or two. The trend is modestly lower. I know everybody likes Cattle Facts to give our forecast. It kind of sets us up for failure sometimes. But I think most people can look at this and say, fed cattle between $1 and $1.30, we can realize that. Fundamentally, that's probably where they've been and where they should continue to be over the next year or two. Feeder cattle from 135 to 160. Calf values from 140 to 185. I don't think we're going to have to get that low this coming fall, but we already have been to 185 this spring. This market, these cold cow market, is really, really tough. Battling the same dilemma there is just not enough cow killing capacity for the supply that we have today. These prices have suffered tremendously. African swine fever will be a wild card for the next several years. We don't know what the potential impact of this is. We don't know what all the ramifications of this will be going forward, whether they'll get it contained. These hog farms in China have to lay dormant for at least 6 months to a year before they can go back. And that's after a lot of testing before they will do that. Can this be a global thing? It certainly can be. Again, if we get it here in the U.S., that's a tremendous reduction in pork overnight. Volatility will remain elevated. Our leverage is not going to increase significantly over the next couple of years. Nobody's going out there starting up a brand new packing plant that'll process 5,000 a day. And that wouldn't even be enough. We currently have processing capacity to harvest about 480,000 head in a 40-hour work week. And we need to harvest at least 520,000. That tells you the strain on the employees and the infrastructure that we have currently. We should remain profitable, but cyclical price risk into the early 2020s. I think, again, there's enough money in the business for all these segments to profit. But we also have several challenges in front of us by segment that we may not be able to cure over the next couple years. Again, we'd love for you to become a member of CattleFax. Just because you heard me today and we have our outlook, it changes so quickly. African swine fever impact we didn't know until March 14th. And that can certainly change going forward. Was there time, Andy, for questions, a couple questions? If anybody had any, I'd certainly be willing to help answer that for you.
We do have time for a couple of questions. Take advantage of this gentleman. He is full of information. We have one right there. Yes, ma'am.
Yes, ma'am. Is the laboratory beef produced, is it available now and is it marked? It is not necessarily available right now. That is one of the things that's been the battle, is that we would like, obviously us as cattle producers or people that are in this industry would like for us to be on a level playing field with them. So the companies that are in this business, that are producing this product, would like for it to be not USDA inspected, but the FDA inspected, which only happens maybe once every 3 years. And so the beef industry as a whole is saying, if they're going to do this, good. We don't know what the potential impact is going to be, but we want it to be on a level playing field with beef, USDA inspected and labeled as such, lab grown. And I think we're going to get that accomplished. Yes, ma'am. Good question. Yes, sir. If they are, the question was, is Burger King not testing the market with lab-grown beef? If they are, I don't know about it. They very well may be. I don't know. In Missouri? If they can do it economically, again, that's going to be a threat to us, certainly. Yes, sir. How does the I don't know that there is. They don't have that. They won't have that in the lab-grown beef. I mean, it's simply a cultured meat.
How does it compare to it, so as far as protein level?
It's beef. It's same. It's the same thing. It's cells of cattle, so it is the exact same thing.
Well, the USDA inspection has got holes in it even in the beef industry, much less in this kind of.
That's a bigger issue than we can solve here. That's for sure. Yes, sir.
How much effect is this going to have on this schools with no beef on Monday? Do you think that might catch a hold? Or?
Yeah, the question was, what effect does this have on meatless Mondays, particularly with schools? And that, those are things that I don't know that we can, how do we solve it? Do you fight City Hall? I mean, it's one of those things where we're going to have these things that creep up on us all the time that threaten our industry. And we have to fight back, but you also have to fight back fair. And a lot of times when you go back to fighting, it looks like you're defending yourself, and really what you're doing is you're just trying to support your industry. And so I don't know the big effect of that is it's not good. Obviously, we don't like it, but something we have to take at this point. Is there somebody else? Yes, sir.
Okay, some of your packing hog facilities around the United States are owned by Japan, like Hemphill. Do they have their own processing plants where they process their own meat and everything?
The question is some of the pork facilities in the U.S. are owned by Asian markets, particularly Smithfield, and do they have their own processing facilities? Was that the question? In here domestically, Is that, yes, definitely. They did, Smithfield, I mean, we kill a lot of pork here. Smithfield kills a lot of pork here in their facilities, and obviously that is, it obviously has to be ractopamine free. It's still, as well as beef and all those types of things if we're to ship it to China. But hungry people relax their restrictions on a lot of things at times, for sure. Yes, sir.
With herd expansion, you said that the profitability and the climate overall is very favorable, but you predicted that it's leveled off. What is the reason for that?
The question is why has expansion leveled off? We don't know that it necessarily has. We feel like that we could still continue to grow very modestly. Profitability is there, but it's not significant enough to breed significant expansion, and just not sure that we have room to expand a lot more. Other than in the southern plains, there is some areas that we can still, but I think overall most people are running at capacity, if you will. And yeah, it doesn't mean that we can't still expand, but it will be much more modest than the rapid expansion rate that we've gone through this really expansive period since 2014. Good question.
Okay. Any more questions? Oops. Yes, ma'am.
In your opinion, what do you think the consequential effects will be of grass-fed organic beef as opposed to, let's say, how are they going to be a player in lab-grown meat and conventionally raised and marketed meat?
Yeah, the question is lab-grown, grass-fed, all these different niche markets, if you will. We don't know. I mean, there's obviously some of them that catch a hold, right? We look at the whole veggie-based burger thing. How well has that really caught on? The lab-grown meat, how competitive is grass-fed and with lab-grown and those types of things? It's a niche market that somebody will potentially profit from. We don't know that the lab-grown meat is going to survive. We don't know that it isn't. I think it's one of those things we have to look at as a potential threat out there for us, yet at the same time, how big of it is it going to be? Is it going to be competitively priced? Is it going to be more expensive? Are people willing to pay for it? I think obviously there's way more questions than we have answers for at this particular time. But I did want everybody to kind of get it on their radar that these are the types of things we have to deal with. Thank you all very much. I appreciate it.
Thank you, Troy.